What's going on, my fellow wealth creators? Matty Ice here. Welcome to another training. We are going to answer the question, when is the best time to start an infinite banking policy? I saw this in the YouTube comments or the comment section of a YouTube video I was watching the other day. It's a really good question because the timing of when you set your policy up is an important factor. Because I don't know about you guys, but if you're anything like me, when I started learning how infinite banking actually works, I got really excited about it, and it just became a no-brainer to me. The more I learned from it, and like all the benefits that we get. So a lot of times we want to pull the trigger right away, and that's great. But sometimes we need to take a step back and really analyze our situation, our finances. Are we in a good position right now financially to set a policy up? Because you need to be able to fund the policy enough and properly. It's not like a specific dollar amount. So we're gonna get into that, but you need to be able to fund it properly, and you need to be able to fund it for a long enough period of time to really get the benefits here, right? So, because I've met people that set policies up with $50 a month, 100, $200 a month, and I'm not saying that's a bad thing necessarily, but my question in that scenario is always, would that money be better spent investing in yourself to increase your income, increase your cash flow, so that way when you do increase your income, you're in a much stronger financial position. You could fund the policy a lot better, right? That was my situation anyways. I learned about infinite banking a long time ago, but made a lot of mistakes. I was broke for a long time, whatever. So I had to fix that part of my life first. But then when my business really started to take off, I had, a bunch of money saved up, and, I know what my income is going to be roughly every single year. Now I'm in a much better position to set up that policy. So that's what I want you to think about. We're going to go through a couple of bullet points here just to give you some ideas, some questions to ask yourself. And also make sure that you're working with a professional agent as well, licensed agent, advisor, whatever, to help you analyze your current financial situation. They'll be able to point you in the right direction. Of course, I'd love to work with you. I'll have a link down in the description if you want to book a free infinite banking coaching call. Definitely take advantage of it. But let's go through some bullet points here. Now, the other thing that I want to mention too, when I get asked this question, a lot of times that question is around the internal rate of return, like the dividend rates, internal rate of return of the policy. And here's how I usually answer that question, guys, is I always remember that the internal rate of return that we get in these policies and in our dividend rates, it's just a bonus, right? It's not why we set the policies up. We're not setting policies up to make 3 to 5%, even though, over a long period of time, because it's getting that uninterrupted compound growth, it's tax-free and all that stuff when you set it up right. It can turn into some pretty significant numbers later on down the road, but that's not why we're setting it up. It's how we use the policy. It's the problems that it solves in our lives that are really important. With that said, dividend rates have been pretty much rock bottom for a long time. At the time of this recording, interest rates are going up. So I do anticipate that to have an impact on dividend rates in a positive way. So if you're setting your policy up now and your illustration is showing current dividend rates, but 6, 12, 18 months down the road, dividend rates have gone up quite a bit, obviously that's going to have a really good impact on your policy. So that's something to consider. But again, it's not why we should be setting these policies up. I just want to address that really quick. Now, to give a really simple answer to this question, when is the best time to set up an infinite banking policy? It's when you're able to consistently save money. That's it. All right, we're going to go through a couple of other points too that I definitely recommend considering. However, you need to be able to consistently save money. Now, there's no special dollar amount that you need to get to. Okay, I set my policy up to my first policy to put in $25,000 per year. I front loaded it, all that good stuff. I'll have a link in the description if you want to see my actual first infinite banking policy. And the second one that I'm setting up, I think I'm doing, I got to double check. It's like it's like $20,000 per year, right? Now, based on my business, my income, and how much money I have saved, et cetera, that makes sense for me. And I can do that comfortably for a long period of time. It's not going to put any real stress on my finances in order to do that. And that's what you really want to think about. How much are you able to comfortably save every single year on an annual basis? And if that number, when you're running illustrations and stuff, if it's not enough to really help you get to your goals and solve the specific problems you're trying to solve, then that's when that money you were going to save, and that's where you invest it back in yourself to increase your income, increase your cash flow, and then come back a year or two later. Also, maybe you set up a convertible term life policy for now, because they're usually very cheap, and you can always convert that into a whole life policy later. That's a really great strategy to implement if you're not in a strong financial position right now where you're not able to save consistently. You can just start a convertible term policy and convert it later on down the road after you've increased your income. So that's a really important consideration as well. But the main thing is being able to consistently save money. And here's the thing: is when we set policies up, there is some flexibility with how much you can put in every single year. So, for example, I told you my first policy, I'm putting in $25,000 per year. But here's the thing: I'm not on the hook for that. I'm only on the hook for about 60. I think it's like 6,200, right around that range, because I set my policies up with a 25% base, 75% paid up additions. The paid up additions, you do not have to pay that every single year. That is totally at your discretion. So if one year cash flow is much less than you anticipated, and that in this example, that $25,000 payment, that would put too much stress on my finances, I can only do I would only be I could choose to only pay the base premium if I want it. But here's the thing: is while it's good to have that flexibility and that backdrop of safety, I guess you could say, with just being flexible on what you have to pay, I don't want to set the policy up anticipating that we're going to need to do that, though. Right? When you illustrate your policy, and of course, nothing, illustrations aren't guaranteed or anything. Like dividend rates can change and et cetera. But you want to be able to stick to that schedule as much as possible. All right, because you're setting these up for a very specific reason. So we don't want to underfund the policy, and it wouldn't be the end of the world if like one or 2 years out of a couple of decades you have to do that. My point is making sure that you're able to consistently save money. That's when you set your policy up, and you figure out what dollar amount makes sense for you every single year. Now, the other thing, kind of second part of the answer to this question, when is the best time to start this policy? I recommend is when you have at least $10,000 saved up that you can front load into the policy. I'm not saying that's not like a magic number or anything like that. You could start with, 5,000. You don't even have to front load the policy if you don't want to. But from an efficiency standpoint, right, it's always best if you can front load the policy with a lump sum that is more than your annual premium. So what I did, I front loaded my policy, like my first year, I did 120,000, and then I'm doing 25,000 per year after that. So I did a pretty large lump sum. But when you watched my video on where I break down my own policy, when you do that, man, it supercharges the policy. You get access to so much cash value right off the bat, and again, you can go to work implementing the infinite banking concept right away. That's exactly what I did. I started borrowing for my policy immediately as soon as they would let me. It's usually within the first 30 days. But when you front load the policy, you have access to so much more cash value, guys. Also, it supercharges the policy, the growth of the policy as well, because you're starting with a larger number. That compound growth is going to, have an even bigger impact on that policy now because you're starting with a larger number, right? So I'll go ahead and end with that because I don't want to overcomplicate this question. Those are two main things you really need to think about and consider: is, are you able to consistently save money? Do you have at least $10,000 saved up that you can front load into the policy to really kickstart it and supercharge it? The answers to those questions will determine whether or not this is a good time for you to start an infinite banking policy. And if it's not, like I said, you can always start with a convertible term life insurance policy that basically what that does is it locks in your insurability. Plus, now you have the benefit of having life insurance in case something happens to you. Your loved ones will be cared for. But when you're in a stronger financial position, now you can convert that policy into a whole life policy and start implementing the infinite banking concept, right? So just don't rush into it, guys. I know that we get a lot of benefits from these policies. It's really exciting. Trust me, I get it. I absolutely love this stuff. I see the power of it in my life every single day now. It's just incredible. But we don't want to rush into it. Want to make sure we're in the right position to set these up, right? So I hope that was helpful, guys. If you have any questions, comments, I'd love to hear your feedback. Anything else that you want some clarification on when setting up these policies, drop some comments down below. Would love to hear that. Make sure you take advantage of the free coaching call. I got free infinite banking masterclasses and universities. All that stuff's in the description to help you along your infinite banking journey. All right. So hope you guys are crushing it. I will talk to you in the next one. To your success, Matty Ice is out.